Good morning. As the slide says, chair is what I normally do. Acting CEO is what I am at the moment. We're in a search process for a new CEO. Our previous CEO, after 9.5 years, an incredibly successful time, has decided he wanted to do other things. So I've stepped in the meantime. And because we strongly believe in the separation of executive and non-executive functions, I've stepped aside from being chair while I'm acting CEO, and the company's appointed one of our other directors as acting chair. I have far too many slides, so when I go through this, I'll be skipping over a number of them without even commenting on them, but I just wanted to make it clear that if anyone wants the full presentation, I have 2 or 3 hard copies, but given who we are, we're reluctant to print. But I can send it to you electronically if you want to catch me at morning tea with your business card, or at the end of the presentation, my email address will come on the screen and you can email me and I can send you the whole presentation. So I'm going to go through some highlights, a bit more detail of financials, and then our business outlook. So, in terms of highlights for the last financial year, in no particular order, we continue to grow our funded. By the way, the company has about 66% of its business is in retail superannuation. We have a retail superannuation fund with both accumulation and pension options, 13 investment choices overall. And we also have managed funds, which comprise the other roughly 2/3 of our funds under management. We're growing strongly with our funded superannuation members. This is all in the financial year ending the 30th of June 2019, was up 11%. We had strong net flows, even though the arrow points downwards. That's downwards compared to the previous year, where we got a very large institutional, not a mandate, but an institution who invested with us. But the strong inflows, it's still at $322 million, where about 60% of superannuation funds in Australia, their funds under management are actually decreasing. Funds under management grew by 21% to $3.4 billion, and I'll return to that. Net profit attributable to shareholders was up 29%. Our revenue was up 14%. Our operating expenses, and I'll come back to this, also increased as we continue to invest in the growth of our business. The dividend was 5 cents a share for the whole year, which was up 25%. And the share price, as at the 30th of June, was $1.77, which was up 31% on the same time the previous year. During the year, we did a share split of 100 shares for 1. So if you go back over time, the share price doesn't look very good, but in fact, it's very good. And I'll come to this in a minute. As of close last night, I believe it was up in 3 months, or just over 3 months, another nearly 50% to $2.54 a share. We've got industry-leading net promoter scores. We've got industry-leading client retention rates, which I'll come back to. Our investment performance over the last year on behalf of our customers was excellent. All funds, with the exception of our fixed interest fund, exceeded the benchmark over the year. Our emerging companies fund was our performance was particularly good, which earned the company a performance fee, which went straight to the bottom line. Our Australian shares option in super achieved top quartile performance over 5, 7, 10, 15 and 20 years. We had the best performing superannuation growth option in the last year. And our My Super option, if you're familiar with the industry, ranked number 2 over the last year. We were the recipient of a number of investment awards, which I won't take the time to go and read. In terms of financial highlights, the main one I want to call out here is our total shareholder return, which over the financial year ended 30th June 2019 was 34%. Our revenues, as I said, were up 14 million. And even with that outstanding result, we were able to reduce fees to our customers in some of our offerings last year. And this continues a 4 or 5 year program of gradually reducing our fees, which we will continue to do, and we will share the growth of our company with not only our shareholders but our stakeholders as well. The detail of the key financials are there, which I won't dwell on. This is a slide about the growth, and as you'll see, I think the opening address said we were here 4 years ago. Well, 4 years ago, we had 1.17 billion funds under management. That has now, in 4 years, tripled to $3.42 billion funds under management. As I said before, our funded superannuation members have increased every year and continue to grow. And our net inflows continue to grow as well. You'll see that the 2019 bar chart there is a little lower than 2018, but that's, as I said, because of the grey colouring, which was the institutional investment that we had that was made to us. Our expenses continue to grow, but at a rate less than revenue, and that's why our profit continues to increase as well. But scale is emerging, but we're still in the growth phase, so we're still investing in the future of our business. We have a great balance sheet, no debt, and a strong cash position. Again, all of the metrics are on an upward spiral. As you can see, the share price was 59 cents, the equivalent thereof, in 2015, $1.77 at the end of the financial year, and last night closed at $2.54. Now, you look at that slide and you think, wow, can this keep going? Well, of course, there are no promises, but I have to tell you, I can't count the number of conversations I've had with people who say to me, I was going to buy when you were 25 cents and then it went to 35 and I thought I'd miss the opportunity. Or I was going to buy when you were $1 and it went to $1.30 and I missed the opportunity. Or I was going to buy at the end of the financial year at $1.77 and now it's $2.50. I've missed the opportunity. Well, unfortunately, I missed the opportunity as well. But we have very, very strong prospects of continued growth. And at the same time, we deliver dividends. We have a dividend payout ratio policy of between 80 to 100% of our profit to be paid in fully franked dividends. And whilst we'll always reserve the right to not pay such a high dividend if we need capital or we see an opportunity, we've consistently delivered on that policy. So looking forward, our strategic business update, our strategic pillars are based around the concept of investing for a better world. Our first pillar is ethical leadership. Our second is professional investment management. Our third is a strong client focus. And lastly, a sustainable business. Let's look at ethical leadership first. And this is the core of what we are. Our share investments produce 70% less CO2 than the benchmark. We do not invest in fossil fuel companies. We do not invest in nuclear. We do not invest in tobacco. We have a strong engagement process. And we have 3.1 times more impact to achieve the UN Sustainable Development Goals than the market. We have 6 times more investment in renewable energy than the global share market. And we advocate on social issues as well, including for a ban on live animal export. And we supported during the year the social justice campaigns such as the Kids Off Nauru. One of the things about we're most proud at Australian Ethical is our charitable donations. We donate 10% of our before tax profits to charitable organisations every year. Last year that amounted to $937,000, and we've donated $3.5 million to charities since our inception. We have multi-year partnerships with organisations such as Human Rights Watch, the Wilderness Society and Food Frontier, and every year we seek expressions of interest from organisations, and we go through a rigorous process and then a voting process among our stakeholders as to who receives grants of between $10,000 and $20,000 during that year. Last year, more than 18,000 people participated in the voting as to which organisation should receive those grants. And we don't just give it to whoever gets the most votes, given that large organisations can sometimes get their supporters to vote more often, but it's a really good way for us to interact with our customers and potential customers. Second thing is professional investment management. As I said, we've had strong returns, and we're very confident that they will continue, particularly returns net of fees, as we continue to improve our offering to our customers through lower fees. You can see from this chart that we're in the top left quartile, which is obviously where you want to be in terms of return and risk profile. And the chart there tracks our Australian share fund net compared to the S&P ASX 200 and the ASX Small Industrials. I'm going to skip over the next 2 or 3 slides, which just indicate we've got a long track record of outperformance. In our Australian share funds, in our emerging companies fund. I am going to just stop on this. This is a chart that shows in the super industry client retention rates. Now you see on the left-hand side, these are the funds that are negative in terms of client retention. That is, they're losing more members than they're gaining. And at the right-hand end, they're the funds that are increasing their membership by gaining members more than they're losing. And you'll see the 4th lowest there is Australian Ethical. And in fact, if you look at the colour coding, we have the lowest across all retail funds. Australian Ethical retention has consistently been in the top 5 funds over a 5-year period. A couple of charts to just show annual growth by assets under management in superannuation, the left hand, which was last year, and then over 5 years on the right-hand side. And some of those funds that appear to be growing faster than us, some of that growth is actually because of mergers. Scalability, I've basically covered those things. Sustainable business is the next thing I want to deal with in the couple of minutes. I think we're a couple of minutes late, weren't we? This is about our people, and we strongly invest in our people. We have top quartile employee engagement. It's amazing the number of talented people who actually want to work for an organisation that does good, and that's what we do. But we look after them as well. We have 2 days that we pay that they can go and volunteer organisations. We've got wellbeing programs, generous parental leave, and we pay superannuation contributions on parental leave, etc., etc. We also are a very diverse organisation. We meet our diversity targets. We have 50% of our board. In terms of gender diversity, 50% of our board are men and 50% are women. In terms of senior management, 44% women. And in terms of the overall employees, 54% of women. We also have 51% of our employees are born outside Australia, and 57% of employees speak a language fluently other than English. Now let's look at the outlook. We believe we're ideally placed to capture opportunities for growth as more people realise that our approach is achieving strong returns and delivering social good. I'm not going to read all of those points, but I do want to go to the next one, which is really important, and that's the outlook continued. 2019 was a watershed year in calls for action on climate change. Whatever you think of climate change as an issue and how much of a threat it is, I'm sure you'll agree that 2019 was a watershed year in its calls for action on climate change. We are perfectly positioned to capitalise on this as people look more and more to invest their money and or their super in vehicles which do not exacerbate the problem but are clearly part of the solution. Australian Ethical has a long track record of investing for good, of using advocacy and investments to bring about change, whilst at the same time delivering competitive returns. What we do with our investments is we have an ethical screening process first. If a company comes on our radar screen, for example, in an equity investment, it must meet our ethical screening process first. Even if it does, it doesn't mean we invest. We then do a fundamental investment analysis, as indeed any fund manager would do. And then we construct a portfolio around the results of those. So we make positive investments. Healthcare, aged care, technology, clean energy, recycling, etc. But we also have a negative screen. And we won't invest in coal seam gas, in oil, in weapons, in tobacco, in forest logging, exploitation, gambling, human rights abuses or harmful products. I'm going to skip the next few slides just in the interest of time, to allow some time for questions. Just wanted to give you just some examples. Too many slides. Just some of the examples of recent investments we've made. First Solar is a company that's developed, financed, engineered and constructed and currently operates many of the world's largest grid-connecting photovoltaic power plants. Meridian Energy is a New Zealand electricity generator which has got hydro and wind and in New Zealand and wind in Victoria and South Australia. Applied Materials, Ripe, and Big Tin Can. You can read those. Finally, I was asked to include some information about our shareholders. You can see the number of shares on issue, number of holders. The top 20 shareholders hold 53.38% of the company. We're actually large enough. We're included in the All Ordinaries Index during the last financial year. We're actually large enough by capitalisation to be in the ASX 300. Unfortunately, we don't meet the liquidity criteria, and that's one of the reasons why we did the share split. But if we can increase our liquidity, then we would be in the ASX 300. You can see the range of distributions and so forth. Our shareholders, apart from one or two exceptions, are largely individuals, retail investors who see what we do and like it. And I'm going to finish on this to allow some questions. This shows for the last quarter, which we released to the market a couple of weeks ago, that in one quarter, our funds under management went up by $225 million. Don't forget, 4 years ago, our total funds under management was just over $1 billion. And in one quarter, okay, half of that was market movements, and markets were good in that quarter, and we can't always expect markets to be that good. But in total, our funds under management went up by $225 million, about half of which was net funds inflows, which, if it's repeated, would be growth of between $400 and $500 million just in funds inflow itself in this financial year. We believe we are well positioned to continue the growth path that we've been on for some time, as more and more people, I repeat, really do care where their money's invested and want to be part of the solution, not part of the problem. Thank you. last slide. My email address, if someone would like to send me any questions or request a copy of the full presentation, I'd be happy to send it on. Thank you.
Great story, Stephen. One of my daughters is a very happy shareholder, so well done. Any questions from the audience for Steve?
Hi, Steve. Well done.
Thank you.
Just a quick question on the approach you're taking in the small cap sector. And,
Sure.
What your approach to long-term growth is and what you kind of do in terms of holding those investments. I'm assuming you have some growth and some return investments.
Yeah, we do. I think one of the slides I skipped over, I think if we were characterised, we'd probably be characterised as growth at a reasonable price, GARP manager. But we do have some yielding stocks as well. We tend to, once we buy in, I'm not the investment professional. We have our own investment team, 9 or 10 people who are all very bright. We tend to buy stocks and hold them. But of course we will trade and we will get out if we think that a price point has been reached or if something fundamentally goes wrong with the company. But we do tend to buy and hold. So it's not a high turnover portfolio by any means, but there is some. And we're always looking to add new companies, of course. But that takes time because there is a great deal, I went through briefly the ethical screen and then the fundamental analysis and then how it fits. Even if it passes those, it might not actually, from a portfolio construction point of view, fit nicely. So that's what we do.
Question for me, Steve.
Sure.
In terms of the business model,
Yep.
Obviously you've had some great success. You've got the ethical overlay, if you like. Your investment performance is solid.
Mm-hmm.
The client service is also very solid. Generally speaking, what drives investors to invest in your products? Is it a combination or is one particular thing the driver?
Look, we do a lot of work in terms of trying to understand our customer base and also our potential customer base. There are a proportion of the population who will say, I'm prepared to compromise on the return I get because I believe strongly in the ethical investing. That's a relatively small number of people. There is then a very large number of people, almost up to half of the population, who says, so long as I'm getting competitive returns, then I want my money to be invested in things that do good, that don't harm the planet, that don't harm animals, that don't harm humans. And then there is a group at the other end who say, well, I'll only invest ethically if you can guarantee that it's not going to make any difference to the returns I get. So it's obviously the first two that we concentrate on. And look, we wouldn't be in business if we had terrible investment returns. We're an investment company. People are putting their savings with us. They want a return, but they also want to make sure, as I said before, that they're part of the solution, not part of the problem.
And in terms of your business model from a marketing point of view too, you're also quite different to a lot of fund managers that distribute their product and get most of their inflows by financial planners. You have a lot of business that comes directly.
Most of our business comes directly. For our superannuation fund, we are the default fund for maybe a handful of employers at most. Most people who come to us choose to come to us. And most of our the fundamental focus of our marketing is around digital and around social media. That's the space that we operate in. That's where we promote our brand. That's where we're looking for our brand awareness. We have 120,000 followers on Facebook, for example. And it's amazing when an issue becomes into the public, like the recent climate, but other things, how conversations commence on the social media, and we're very much part of those conversations. So that's our focus. We will do some traditional advertising. You will see sometime over this financial year another brand campaign. Our biggest issue for our business is that we need to make sure that people know we exist. And if people know we exist, then we will continue to grow. In fact, the more we can make sure people know we exist, the more those charts will go off the roof.
Any final questions?
Yeah, hi. Great presentation. I'm a happy shareholder.
Thank you.
I just wanted to find out whether you're investing outside the ASX or you're looking at setting up a global fund.
We do have an international shares fund.
Yep.
It's what I'd call a thematic fund, which is it's around basically renewable energy. And once the companies are in it, we then sort of basically manage it to a constructed index. So it's not an active stock picking fund like our Australian Shares Fund or our Emerging Markets Fund. It's more a passive around renewable energy globally. So we do that. We also have a cash fund and a fixed income fund, and of course we have a balanced fund as well. So
Are you looking at expanding that so Australian investors who want to invest ethically can still invest with you but have access to these global companies that are doing well?
it is one of the things that's obviously on our agenda, is to make sure that we continue to offer products that appeal to people from all sorts of things. It's fairly hard from an ethical point of view to manage a fund internationally, but it's one thing we are looking at. I can't promise it this financial year, for example, but it's certainly something going forward. As we grow, we would like to invest in.
Yeah, great. Well done. Thanks.
Thank you.
Thank you very much. Well, thank you very much, Steve.
Thank you.